Hi traders, Jack here from ForexMarketMaster.com. Today I want to talk with you about the power of pin bars. Now we have a nice pin bar setup that we want to talk about, and that's this pin bar here. And we want to talk about why the pin bar, in particular, why in this location this pin bar is such a good entry signal. Well, let's start at the beginning. The first thing we need is to know what our trend is, and our trend is down going into here. Okay, the second thing we need to know is where are our actionable areas. The only way we find out where our actionable areas are is to mark off horizontal support and resistance lines. We have one here. We have another at a swing low, and it has to be a recent swing low. This is a recent swing low. This is another recent swing low. Now, why is that? Because we want to see where support turns to resistance. And that's happened here. We've had it change here. We've had it change here. We've had it here. These areas are areas of resistance. So what we've seen, we have an actionable area, and that's what we're looking for. The next thing we want is we want to see the pin bar, and this is what we've gotten here. This is our big signal. So once we've seen this pin bar, we want to enter the trade at the close of that pin bar. So we want to enter it here. We want to put a stop loss just a couple pips above the high. And one other thing that is important as to why we want to take this trade is we want to see an area where we can get a 2-to-1 or greater return. And that's right down in here. Obviously, there's no problem hitting that area with a 2-to-1 reward to risk ratio. So now that we've had our pin bar, let's see what's happened with this pin bar. Price pushed up through 2 levels of resistance and got kicked right back down. There's no more value. We saw an inkling of it right here in these two. They couldn't get any higher. The traders once again tried for one last push, and that was the end of that. We've got our reversal bar, and we're in the trade. And away it goes. Now this is what we need to have, is we need to give a little bit of time, because this candle, let's take a look at these again here, post-trade candles, this is obviously needs a little more time. So we just have to, you have to give it time. When you're on a daily chart, you need to look at days. Don't be looking at 4 hours. Don't be looking at the hourly. You need to be looking at the daily chart. Now, one other thing that was quite confluent in this, with our price being able to head down like so, is that when we look at the global macroeconomic news, we're being told how the European debt crisis is affecting the European currencies. And though the pound sterling is not the euro, it is a European currency. And the sentiment in the market is to sell the pound. And that's exactly what we're playing off of too. It really fed into this and made for a very high probability, low risk trade. These are the kinds of things we're looking for. This is the kind of thing we teach at ForexMarketMaster.com.